Hi, morning everyone. Morning everyone. Let's get going here. Watching the. No, man. All right. Last night's session in the States wasn't a session. We were closed, obviously, for Thanksgiving holiday. Today we've got another half day. I know we've been talking about this. We're really light volume trading yesterday. You could see all sorts of kind of random action, I suppose, happening, and we had some big price corrections as soon as our market was closed. We also had the OPEC meeting that ended at the end of our session, which really shook things up a little bit. So, following on into Asian action, not a whole lot going on there. We had the Nikkei that was up quite a bit, maybe on a little bit weaker yen. But then we had Australia under pressure. Australia was the big standout, I suppose, down over 1.5%. What happened? Obviously, the commodities really came under pressure, along with oil. That really weighed on the Australian index. We had BHP over there, which was down over 3%. That follows on the back of a previous day's move of over 1.5%. So, and we didn't correct here yesterday. So, I mean, we did close about $7 or $8 lower in London than we did here locally in Billiton's. And so we'll probably see some real downside in a couple of those shares this morning. Billy's is going to be under big pressure. You got to know that some of the other mining stocks you would expect would also be under significant pressure. So we'll get into a little bit more of that in the charts in just a little bit. But yeah, more or less that's kind of what the overnight picture brought us on Thanksgiving. Okay, we have on our charts of interest here, we've got OPEC's dilemma to cut production or not to cut production. And the problem is that if they cut production, obviously they can get prices a little bit higher, but then that also adds to more investment into shale production, which obviously going to hurt prices in the long run. We've got, and then OPEC starts to lose market share, which they don't want to happen. So this is kind of starting to look a little bit reminiscent of some of the something that happened back in the 70s, if I'm not mistaken, and where they actually purposefully wanted to get the prices low to try to force some people out of the market. If you get sustained higher prices, that gives people more confidence to make an investment. If the price is volatile and it's coming off of and it's shown you some really low prices, then it makes people very nervous to invest. Therefore, obviously giving OPEC a little bit more power. So that is kind of the thought process in them not cutting most likely. All right, in corporate action. Nothing really going on today. We do have a lot of stocks that are going to go ex-div over the weekend. So on Monday we've got Life Healthcare, we've got Spar, we've got Famous Brands, we've got MediClinic, we've got Invicta, and we've got Coronation. So just keep that in mind. A lot of divs coming over the weekend. Right, and in terms of market data, we had some data out of Japan, jobless rate, CPI, industrial production, jobless rate and CPI were a little less than expected. CPI obviously continues to come in with less inflation than they're actually wanting and that they're expecting, and obviously just probably adds fuel to the fire in them keeping monetary policy loose. Industrial production year on year was actually a little bit better than expected. We had UK consumer confidence, which came out a touch worse a little bit earlier. We've got nationwide house prices there in just a minute, as well as retail sales out of Germany. Then later in the Eurozone, we've got unemployment rate, CPI estimate, and then here locally we've got the trade balance, and then we've got the budget. So, all right, let's get into the maps. Okay, the first thing that I wanted to have a look at this morning is actually the gold price. We looked at this yesterday. We talked about the massive level, obviously, at 1,200. Let's zoom in a little bit further forward on what I've done there. Okay. Sorry. Okay, so huge level at 1,200, as we know. Also a level at 1,280 to speak of. And what I just wanted to obviously go back and revert to that, show that again. What I wanted to show here is how many days we had: 1, 2, 3, 4, 5, 6 days, 7, if you include yesterday. So 7 out of the last 8 days before yesterday, or before today, that tested at 1200, couldn't close above it. And we failed hard here, really making a bear flag that we dropped out of. I think this opens the door for this thing to take out lows from this month and really accelerate to the downside. So just watch closely. Now I don't know how under pressure gold miners are going to be at the open here. Obviously the States was closed last night, so we didn't get any of that the pricing changes there. But I think this is some real bearish price action potentially coming out of spot gold. For me, the fact that we failed so after trying for so long at 1200 just proves that there's nothing there to really get it through that level, and I think that we could see some real significant downside from there. So watch some of the gold shares now. There could be some downside in those shares. One thing I also wanted to just mention is that we had some big moves in European bond yields overnight. We had Germany that went down to a record low in terms of bond yield. I think we're down on the 10-year. We're down right at 0.7% on the yield. All the other European countries also, for the most part, doing the same. Italy down at 2%. I mean, just really starting to price in this deflation again. And interestingly enough, this is something that we saw before that last major correction that we saw. So just watch it closely. There could be some interesting action on the cards in the markets again. All right, looking here at clicks. Clicks, not one that we look at often, but beautiful bull flag here, breakout from in yesterday's session in fashion. Looks like it's going to be taking out the highs and making new all-time highs, in the near future. Telcom also a very bullish price action again. We've put this consolidation in after we broke out from between call it 62 and 67ish. We're breaking out there again, so also bullish action here. Make a breakout after a big wide consolidation here between 50 and 62, only to consolidate for most of the month of November, and now breaking out again. I think there's potentially significant upside still left there. All right, looking at Coronation, these guys obviously paying a divvy on Monday. Breaking out to new all-time high here. I suppose it's possible to look that the breakout was even before, all the way down here. Either way that you look at it, we're breaking out to new all-time highs, which is obviously bullish. I think that this thing probably has more room to run, considering in the way that it's shaping up. So just watch here. That level is at 107. We might come back and test that a little bit before we really move higher, but just watch it closely. Guys might be piling in again for the divvy that's coming on Monday. And the last one we're going to look at here is BP in London, which really dropped support in yesterday's close. You can see there. All of them really kind of getting hammered, all the stocks that have any exposure to oil. And, I think, which one I should show as well is this Sasol. Sasol, we close new all-time, or not new lows for the past year. We talked about this one yesterday, actually broke down through that. If we get sub 500, I think there could be more momentum to the downside today. Obviously oil price down about 8% overnight, so just watch those today. There could be some interesting action in the stocks. And that's it for today, guys. Good luck out there.